we have, with us we have Ashika, Azhar, and Nikia, who would be walking us through various aspects of the provision, and I would be there throughout the session. Feel free to ask questions. I always tell that the sessions are more from the knowledge perspective, more from the practical perspective. Whatever the questions you have, and especially practically when you're actually doing it, we always focus it from the accountant's perspective. So when you're while doing the accounting, or while entering in the government portal, or while you're generating printing, is like, where are the problems that you are facing when you're dealing with the department, what type of the problems you're facing. Feel free to interact with us and have a happy lunch. So on this note, let me hand over the session to Ashika. Ashika would be walking us through the first part on the eWayBill and eInvoice provision. Azhar would be taking us through the practical demonstration of how to generate eInvoice using one of an ASP and how an eInvoice would be looking like. Then Nikia would be taking us through the unexplored areas in the Tally. Couple of things I would like to mention here. There are a lot of participants who join with the system, and it would be typed as Lenovo admin PC something. Request you to rechange it so that we actually know who is the right user who has joined in. The second, in the interest, we will be muting everyone. Whenever you have a question, you can raise the hand, we will unmute you, and you can always put your question in the chat. So on this note, I hand over the session to Ashika. Ashika, over to you.
Yes. Good afternoon, everyone. So we will be discussing first part is about eWayBill and eInvoice. So starting with the eWayBill under GST, we all now very much familiar with the GST basic provisions of eWayBill, when it's to be raised, how it is to be raised, in what circumstance it will be delivery challan, when eWayBill is to be raised. So before going into the complexity, little bit of practical approach, let us just little bit brush up what's the eWayBill about, when is to be generated, what is validity. So as we all know, that main rule which deals with eWayBill is Rule 138. In Rule 138, they have specified all the procedure related to eWayBill. What is to be done, who is to be done, what are the documents to be maintained while carrying the goods for movement. So as we all know, eWayBill is to be generated whenever the movement of goods is caused and where the consignment value is more than 50,000. So in that situation, where you are causing movement of goods, consignment value more than 50,000, we have to generate eWayBill. Now, when we discuss about consignment value, which should be more than 50,000. Now,
the earlier slide. Participants, couple of things which is highlighted in the red color. I want to again slow down and reiterate this. It is applicable only for a registered person. So unregistered person, the officer cannot levy an eWayBill expectation and penalty. Second, this is applicable by the person who is causing the movement. So there is a difference between invoice or supply and movement. For example, I am into the business of renting computers, a server or something. You want the computer to be given to your premises, let's say for 1 week, 10 days, 5 days. When I'm bringing the computer to you, I am giving you a service. It's not supply of goods, it's a supply of service. However, what I am moving is goods. Since there is a movement of goods, you will have to raise an eWayBill if that value is exceeding 50,000. You may want it for the demo purpose. You are transferring from your head office to the godown. There is no supply happening. So eWayBill is for movement of the goods and not whether or not it is supply, you have to raise the eWayBill. This is one common mistake. People think I am not selling it, but still the officer is asking for an eWayBill. This question people always have. It is for causing the movement of goods, and it has to be raised by a registered person. So these are the two things which I would like you to be focused when the eWayBill is happening. Please go ahead.
So now that, as we discussed, that whenever there is a movement of goods, we have to generate eWayBill, and where the consignment value is more than 50,000. Now the another question which arises in the mind of the people, then what does consignment value means? Whenever in the eWayBill rules, they have specifically mentioned what will be the consignment value. It will include your total invoice value, means including your GST charge on it. If an invoice is of 40,000, 10,000 GST, then you have to raise eWayBill because it is now 50,000. You have, in case of raising eWayBill, not only taxable value, including tax, that is the total invoice value we have to consider. However, if there is an exempt supply on which tax is not leviable, then that value will not be considered for the purpose of calculating this consignment value. Now we know that it has to be raised when it crosses 50. The questions are, there are cases where they have specified irrespective of the value. Then also, if you are causing movement, you are liable to raise eWayBill. The things which they have specified is principal and agent. If the principal and agent are located in different state, that is in case of interstate, you have to raise eWayBill irrespective of the consignment value. Similarly is the handicraft good. For a handicraft good also, in case of intrastate movement, you have to raise eWayBill. Handicraft goods, what they have specifically mentioned. So in this, if you fall in any of this, then you are liable to raise in case of intrastate movement eWayBill irrespective of the value involved. Now come the question, who has to generate and what will be its validity? As we already discussed, a registered person who is causing the movement, he has to generate the eWayBill. So if the consignor is registered and he is causing the movement, then he has to generate eWayBill. But where consignor is not registered, but consignee is the registered, means recipient or the person who is going to get the goods received is registered, then that consignee is liable to generate the eWayBill. It may also be case where the consignor and consignee both are unregistered. Then also eWayBill is required to be raised by transporter who is causing the movement of goods. Validity, they have given in case of other than dimensional cargo, if it is up to 200 kilometer, 1 day. For more than 200 kilo, 1 additional day. And for over dimensional cargo, up to 20 kilometer, it is 1 day. And for every 20 kilometer, 1 additional day. So we have to work in this timeline because most of you may know that if our eWayBill expires, then obviously officer has the power to detain the good, confiscate it, depending upon situation to situation. It's not that every time it will happen. If I have the time, they have given me 8 hours time to extend the validity. If I have that 8 hours and if I extend my validity in that time, then the officer cannot detain the goods. So we have to make sure whenever there is a transport of goods, eWayBill and the invoice which the transporter is carrying by them is valid. Otherwise, on expiry of time, that goods can be detained. Now, like we discussed, when eWayBill is to be raised, there are also a situation where eWayBill is not required to be raised. They have specifically mentioned certain things where eWayBill is not required, like in case of non-motorized conveyance, in case of transport of exempted goods, if there is a movement of goods from custom, port, airport, and alcoholic liquor. Obviously, we all know GST is, as of now, it is not under GST, where the goods are transferred for custom supervision, where the consignor of the goods is in central government is a transfer is to the government, then also you but it's provided it should be by rail, then also eWayBill is not. So these are the few instances where eWayBill, even though there is a movement of goods, consignment value may be more than 50,000, then you are not liable to raise eWayBill in these situations. Now, when the movement is happening, what are the things the transporter, the person who is going to move the goods from one place to another needs to carry? He should be in possession of the invoice or bill of supply or delivery challan and eWayBill. eWayBill can be in physical form or can also be in electronic form. So he needs to have this document while delivering the goods. Now, there after what is to be, who has to be generate, what is validity. Now, the main thing which we are going to discuss under eWayBill is about inspection, search, detention, and confiscation of goods during transit. Now, obviously, officers have power to inspect the goods while they are in transit. So it has been provided that if an officer has a doubt about the that conveyance and the goods in which it is being carried on, so it can inspect the goods. So while inspecting the goods, obviously he has to specify that his report, what he has noted, means what is the truck number, what the goods carry in it, what's the invoice number. While doing the inspection, what he noted, he has to mention it and upload in part A of GST EW03. Then after that, he have to submit his final report, means on the basis of inspection, what it conclude in eWayBill 03. Within 3 days of inspection, he is required. And then obviously, if that goods which has been, the conveyance which has been intercepted or detained, if it is more than 30 minutes, then the transporter has to file GST eWayBill W04. This we have specified in flow also, as we discussed. Within 24 hours, he has to generate its report inspection in part A. Then he has to give it final report in part B. Then physical verification, obviously during the transit, what the physical verification he has done. But where the vehicle has been inspected in more than 30 minutes, he has to communicate the transporter. In this case, transporter has to communicate in EWB04. This is the whole inspection procedure. After this inspection procedure, we will discuss about the detention also. Now, as we all know that if you are non-filer, if you are not filing your, even either you are a regular return or a composite, if you have not filing your return for 2 months or 2 consecutive tax period, then obviously if power has been given to the officer, they can block your eWayBill portal. So you can't generate the eWayBill. However, you can file your return, then you can make an application for unblocking of this facility.
Yeah. So here, your previous slide, one more slide back. Yeah. So there are various forms have been prescribed. EWB 01 is our eWayBill and 02, 03, 04. Now, in case if you feel that it is you are completely genuine and it is a harassment and the officer is not doing anything, you yourself can also give an intimation within half an hour. He is not citing a proper reason, and you are confident that okay, there is nothing going to happen. You can also raise a complaint on the common portal saying that my goods have been withheld on the traffic, because most of the time the on ground reality is the SSC looks at okay, the officer will say okay, fine, you will have to end up paying a penalty of 2 lakhs. Now 2 lakhs looks to be substantial. Then the SSC tries to see that okay, can we settle it 10,000, 20,000? Then the negotiation would start. Now actually there are many times where you wouldn't need to pay any penalty. In a while, Ashika will actually take us through the penalties. So you got to make sure that where is the error that's happening. If there is a genuine mistake, there is a way where the government has given by way of circular a lower penalty. But it is an intentional that you want to avoid the taxes, then the penalties have to be maintained. and these procedures would continue. Please continue.
Penalties under eWayBill. We have basically classified our penalties into two parts, specific and general. Now, when we say specific, we are talking about section 129 and 130 specifically. Section 129, which is the major thing, which more of you who are in the good industry day to day involved in the movements of goods, they must be knowing about 129 and 130. 139 deals with search, inspection and detention. 130 with confiscation. Now there is another in specific is minor penalty. By way of circular, they have specified few 6-line item where they have said that in that such error, you should not impose higher penalty. A smaller amount of penalty of 1,000 they have specified. Now then comes your general, which general we all know section 125, which prescribed for 25,000 penalty, and section 122. In that also there are various line items which deals with most of the fraud cases where the goods removed but without invoice given but goods is not there. So that are the few instances which are we are going to discuss now one by one. Now when first we will discuss with specific, that is section 129, detention. As you all may be aware, by 1st Jan 2022, they have changed now the penalty amounts. Earlier, they have specified as 100% of tax and 100% of penalty. Now they have changed it to 200% of tax in case of taxable goods and where the owner come forward. Basically, there is no much change. It's just that earlier they used to say to pay 100% tax and 100% penalty, which they have now make it to 200 penalty. Reason being, because it's obvious whenever you cause a movement of goods with a tax invoice, in that you have mentioned your tax value. Obviously, at the after the end of the month, you will be filing your GSTR1 and GSTR3B. While filing your GSTR1 and 3B, you will be taking that value, reporting that value, and also paying the tax on it. So the thing was that various writs were filed when the tax one paid cannot be demanded again. So that's the reason they have substituted it, and now they are saying instead of tax, they have made penalty 200%. Similar changes they have made in exempted also, and in case where your owner does not come forward. If you will go through, if you will, as you are viewing this slide, this is what the changes they have done over here also. In case of exempted good, tax question does not arise, so it's same as what it was earlier. Only in case of taxable goods there is a change.
Yeah. So just to reiterate, this being a penalty, the way I want the participants to look at is with a simple example. Let's say I am a dealer of mobile phone, and let's say each mobile phone is 50,000 rupees. I am carrying 10 mobile phones. I am supplying from one shop to another shop. In the hurry, I forgot to carry the eWayBill along with me. One mobile phone 50,000, 10 mobile phones 5 lakh. 18% is the rate of tax. On 5 lakhs, 18% means 90,000 rupees is the GST amount. 5 lakhs plus 90,000, 5 lakh 90,000 is my invoice value. I have my invoice with me, I'm physically carrying. I have the goods with me, I'm physically carrying. The IME number, serial number, make, made, everything is perfectly matching with whatever is there in the invoice. Just that the eWayBill print I'm not carrying. The officer is intercepting, asking, okay, show me the proof of these goods. Now, since it is more than 50,000, I need to have the eWayBill along with me. Since the eWayBill is not there, I will end up paying a penalty of 90,000 into 2, which is 1,80,000. When I sell all these mobile phones, let's say today price, the margins are very competitive. If I said it dealer and distributor who have 1%, 2%, hypothetically even 10% margin, I would make a profit of 50,000 rupees in a transaction, while I am ending up paying a penalty of 1,80,000. These penalties are very costly. All businesses should invest in technology, should take utmost care when the goods are moving. You cannot be relaxing, saying that it's okay, one paper is missing, one number is wrong. Instead of carrying and in the hurry, everything was good. That invoice which I am carrying was the invoice, so it was there on the table. The delivery boy was in hurry because the goods have to go. Today everyone follows just-in-time concept, so I dispatch as and when it is needed. Instead of this hurry, eWayBill, if you make a mistake, the mistake is going to be a costly. Why I stopped here in this slide and I am reiterating it is, most of the times I get a call somewhere in the night, 10 o'clock, sir, the officer caught the vehicle and he is asking me to pay 5 lakh. Now, genuinely, these people were making the transaction, but eWayBill has been expired. When an eWayBill is expired, it is as good you are not having eWayBill, or you are carrying a wrong invoice, or you are going, for some reason the vehicle on which it was supposed to go, that vehicle was not available, then the goods have been put into some other vehicle. Any error could have happened. All right, officers don't care. Like they are saying, it's like this is kind of additional revenue. So they, sorry to use this word, you will be literally harassed and you will end up paying money to get it come out of it. So when the goods are moving out, please put an additional check. Most of the organizations think that, okay, this is a low level activity, let us give it. Why do we need one senior person spending so much money on the salary of this person? Let the receptionist do this job, let the office boy do this job. Now, this is the kind of an attitude, the respect that is paid to this work of packing, billing, and dispatching. But honestly, if it is not properly checked and the right items are not going, the penalties are huge. So be aware that eWayBill compliance is very important. Yeah, please go ahead.
So coming to general penalty, as we were discussing, so section 122, which is, as we discussed, if there is a movement of good without the proper invoice, then obviously penalty can be imposed under this section. If you have been involved in improper destroying of any document or any goods that have been detained, seized, or attached. Another is section 125, which specify the penalty of rupees 25,000 for contravention of any provision of act for which no specific penalty has been provided. If there is any specific penalty under any section, then this general penalty cannot be imposed. Now, penalty for minor errors, as we discussed, it were 6 points. First is spelling mistake. If there is a spelling mistake in the name of consignor or consignee, but the GSTN which you have mentioned is correct, then they can, at max, they can impose you a penalty of rupees 1,000. If there is error in PIN code, but you have to make sure the address of the consignor and consignee mentioned is correct. So even if the PIN code is not correct, but if your address is proper, it is properly mentioned each and everything, then also minor penalty will be levied. Error in address, if the error is there in the address of the consignee to the extent of that locality or other details are correct, then also it's fine. If there is 2 or 1 or 2 digit error in the document number mentioned in the eWayBill, then also it's fine, minor penalty. HSN, if the digit, as you all know, from last year only, April 20, we have to mention our HSN code, which is mandatory. So HSN code, which you have mentioned, if there is an error of first 2 digits, then also they are saying that first 2 digits should be correct, and the tax charged on that should be rate of tax which you are charging on that good should be correct. Then also they will not go into a higher penalty of 200%. Similar is the case with vehicle number. If only 1 or 2 error is there in vehicle number, then also they will impose a minor penalty of rupees 1,000.
Now, these penalties which Ashika has shared, see the circular number, keep it with you handy. Sometimes the officers might not be aware, or they would pretend that they are not aware. When you feel that, okay, there are mistakes that have happened, but apparent on record, there is no evasion of the tax, you can still request them to consider. I'm again saying you can request them to consider. Now, most of the times the officer looks at saying that, okay, you are doing fraud. Once the delivery happened, you are reusing the eWayBill, or you are trying to evade the tax. With that tone, the officer would be talking with you. So all that you should have in handy is that your frequency of your filing. If you're filing your 3B1 correctly and you're filing 9 correctly, you can say that, okay, you are an organized company, private limited company, everything is happening, and this was unintentional, something happened, and any of your error fits into all of any or this category, you can still request saying that this circular exists, please condone the delay.
Confiscation. For confiscation is not like a penalty, but the word they use is fine, but it's more or less like a penalty only. So if they confiscate your goods, in order to release that good, they have said that either they have prescribed what should be minimum. Maximum is upon the officer. Minimum good should be market value of good less the tax charged thereon on the value of the goods, or penalty under section 129, which was 200%, whichever is higher. Minimum fine is whichever is higher. So actually you should think 200% of 200% of tax or market value minus tax charge thereon, whichever will be the higher will be your minimum fine in case of goods. But when it comes to conveyance, they have said that if the transporter has come forward and he wants to get his conveyance release, then he is only liable to pay the tax which is payable on goods. On payment of tax, he can get his conveyance released. Now, as we were discussing about section 129 and 130, 129 detention, 130 confiscation. Now the question arises when the sections are invocable and when the officer will go for 129 and 130. Now, if we go through section 129, it says that any person transport any goods or store any goods while they are in transit in contravention of the provision of this act or rule made thereunder. So first things for detention, that good should be in movement. It should be in transit in order to invoke this section. Second thing, it can be invoked for any contravention. There it's nothing specified. Whatever may be the contravention, they can invoke this section 129. Third thing, if you will read over there, like most of the time we read, we think that there should be intention to evade tax. But in this section, there is nothing mentioned that contravention should be with intention to evade tax. It is only mentioned that there is a contravention and contravention happened during the movement of goods. So if this two condition is satisfied, then the officer has the power, he can invoke section 129. Now coming to section 130, how is the difference with? In this section 130, this intention is very relevant. There should be intention to evade payment of tax. If there is any contravention, there should be intention. There may be transfer of goods which is unaccounted goods, means that goods has not been accounted, that sales has not been recorded. Third, where there is supply of any goods without having applied for registration. Fourth, where there is fourth and first one is somehow linked only, they have make a repetition, both are in relation to contravention of rules and act. Fifth one, where the conveyance used as means of transport, means illegal transport has been used for the purpose of transportation. Now the last one, which is, it was earlier there, now from Gen 22, that section 129 and 130 has been made independent of each other. Earlier, after section 129, 130 follows. That is, once the goods is to be detained, then only confiscation happened. Now they are both independent. Direct confiscation can also happen if the officer can prove there is intention to evade payment of tax. So for confiscation, as we read, there must be intention to evade tax, but for detention, that is not a compulsory requirement to invoke this section. Now, as we were reading about detention of goods,
one slide. Yeah. So again, participants, the couple of things one needs to know is this in transit. Very important. What does in transit means? It's not necessarily the vehicle is going and the officer is asking to stop. As it is going, the vehicles also get halted, will halt for various, it's halted for having food, but it is on the road. Even though it is not moving, it is on the road, still section 129 can be invoked by the officer. On the contrary, section 130, which is on confiscation, that section is purely applicable where if the goods which is in possession, so where the journey is complete and the goods are halted, but even the officers are doing a search and inspection and they are not finding any relevant documents for it, then 130 comes. In fact, 130 is a more serious penalty than 129. The penalty under 130 starts with the minimum penalty which is defined under 129, which means in 129 we have seen that the penalty is 200% of the tax, but in 130 it starts with 129 and up to the maximum value of the good. So it's like this: you're going to city market, you're buying goods without any bill, you are coming. Now the officer can ask, okay, you have the goods, where is the bill? You say you don't know, so the goods can be confiscated. Again, detention is different from confiscation. 129 is detaining, so which means it is stopped. Ownership is not passing, you are the owner. But in 130, the goods have been confiscated, so it is literally been taken out from you. You want your good back, you are not owner of it, the goods are with the officer, you pay the value of the money, take the goods. So in the confiscation, your ownership is also going, so that is where the penalty is now completely going to a higher value. So be careful wherever you have the goods without any relevant document. Again, most of the time people will think that, okay, my accounting records are different, goods are different, there is no necessary for linkage. So those people who doesn't pay respect to the proper accounting will end up having this issue. Please continue.
Now, as we were discussing about the detention, what is their penalty and when it can be invoked, we need to also understand what's the procedure involved with it. Now, as we all discussed, sometimes it's happened the goods which has been stopped by officer is unnecessary. It may be sometime lack of knowledge at their side also. Like we discussed for minor penalty, it's very important to have the hold on it. But because of this minor penalty and we not knowing about this circular, we will be end up with 200% of the penalty. Penalty will be 200% of the tax amount. Similar way, it's also happened sometime where my consignment value is below 50,000, even though the officer has hold that conveyance and asking me to pay penalty on it. So it's very important at the time when the interception happened, at the time when the officer record the statement of the truck driver, plus he issue you a notice that this is what the discrepancy has been noticed. On that time only you should immediately reply. You should not wait, and you should not means take it easy, because that penalty amount with the getting goods and conveyance confiscation will be of higher values. So as let us proceed, what the procedure they need to follow. They have to issue you a notice within 7 days. Means when they have stopped your vehicle, they have inspected it, within 7 days they have to give you the reason why they have detained that goods, explaining specifically. It may be invoice eWayBill not matching, good description not matching with your the description given in the invoice. So after giving you notice, they have provided you 7-day time limit to reply to that notice. If you don't reply to that notice, then they will issue your order. If you reply or not reply, in both the cases, they are going to issue you an order. So it may be in your favor if they are satisfied with your reply. It may be against you. So after the order has been passed, suppose it has been passed against you. Now, and after the passing of the order, you have 15 days time to make the payment. If you don't make the payment, they will detain that goods and they will go for the auction in order to realize the amount of penalty. So you have to make sure within the time limit it is prescribed, you take your necessary action. Otherwise, unnecessary of conveyance and good both will be processed by way of auction. Now, earlier they have provided me an opportunity that I can furnish bond or security in lieu of the penalty payable. Now that bond and security they have taken away. Now you can't go for furnish bond or security and get your goods or conveyance release. Now the only process is either to file the appeal or to pay the penalty amount. So obviously, as though the power has been given to them of auction, but they can't go for action directly. They have to intimate to you that they are going for an auction. So if you want, before that auction is done, you can also get your goods released or conveyance released from it. Now, if you will see over here, earlier they don't have the power to go for auction. Earlier it was by this, it was to be followed into confiscation. So when you don't pay, they will go for confiscation and they will impose fine for you in order to release the goods or conveyance. Now what they have done the changes, now they have prescribed for auction. So they will intimate you that they are going for auction. Now that is the time which is again available to you to decide whether you want to go for appeal, you want to pay the tax, pay the penalty and get your goods or service release, or otherwise they will auction it in order to realize the amount. Now, as we are discussing about the appeal, now for, as we all know, for filing an appeal, you have to make a pre-deposit. So in case of this, in case of detention, they have provided that you have to make 25% of the penalty as a pre-deposit. This has been specifically mentioned because pre-deposit is mainly on the tax amount, not on the penalty. So in order to provide in case of section 129, where only penalty is leviable, they have mentioned that you are liable to make pre-deposit of 25% in order to file the appeal. After, obviously, as I will file my appeal, all the recovery and all the proceedings against me will get stopped. Means they can't auction that, they can't move for sale of goods or conveyance in order to recover the penalty amount. Further, they have also provided an option to transporter to get their goods conveyance release on payment of either the penalty or rupees 1 lakh, whichever is less. So conveyance, the transporter can get its release on making this payment. As already said, that now section 129 and 130, they are independent of each other. Unlike earlier, now option has been given to the officer.
Okay, so a couple of things when it has come on the appeal and the penalty. Like when we say 25% penalty, it is like 50% of the tax, because the penalty is 200% of the tax. Second thing, the chances of you winning the case when it is in the penalty, in the initial days, when the matters went to High Court was like on revenue bias, but now High Court actually gets into the facts of the case and looking at the genuinity of the transaction, and the penalty will be actually waived off most of the matters in the High Court, provided you can substantiate the reason for it. Do not expect any relief from the department officials, because they are always revenue biased. So if your case is stronger, you always have to fight for your case, and cases always goes by the merits of the case. You can always put forth your plea. But the point here is you have only 15 days window. Like as Ashika rightly mentioned, if you don't go for an appeal and not paying the penalty, goods would go for an auction. If you want to stop it, file an appeal. If you are not filing an appeal, that 15 days window will be over, then you will end up paying 200% of the penalty amount. So you got to be act quick, whether you want to get penalty and get on with the transaction, whether you want to go for an appeal. You are having a very less time in consulting. Like you may say that, okay, I want to take an appointment of a lawyer, a senior counsel, assess my case, all those things. You got to do quick. You definitely do not have luxury when you are going for an appeal in case of an eWayBill. Please proceed.
Now we have just taken few case decision, which will be helpful for you if any of you who are dealing in goods get their goods vehicle detained, like in case of wrong classification of goods. Now it may be a case the classification which you have done and which the officer fill may not match, but the classification which you have done, it should be genuine. It's not be the case that you yourself have intention to evade. Maybe there may be genuine dispute that whether it will be classified under this HSN code or that HSN code. So if there is no intention to evade and you are a bona fide believer that your goods should be classified under this, then on this ground, the goods cannot be detained by the officer. This is the one of the case where this has been held. Another issue is undervaluation of goods. Section 129, as we read, there should be a contravention of any provision of the act. Now, undervaluation, you cannot be said to be the contravention. There may be fraud and all, whatever may be, but section 129 you can't invoke, you can go for 130. So on this ground, it was held that officer is not authorized to proceed with section 129, and accordingly the order was quashed. Now, there may be a situation where vehicle may took different route. Like what may happen that if there is any rally is going on, if there is any traffic, anything happened, accident, so it may be the truck owner might have taken different route. So by taking different route, it does not mean that there was an intention to evade or the purpose was to contravene any provision of the act. So in this case, if it can be bona fide shows that the reason for changing the route or why we are going with different route, it may be I might have dropped at some other place than to other place. So that is what need to be considered before detaining any goods. Now, where the vehicle has been intercepted within the few hours of expiry of eWayBill. As we already discussed, eWayBill can be extended within 8 hours. So if that 8-hour times is with you, then the officer cannot detain, because if in 8 hours I can extend my eWayBill, and once I have extended my eWayBill, my eWay become valid and there is no contravention of provision, and therefore my good or neither my vehicle can be detained. Now, this is about the seizure of goods, where the goods were seized without the e-invoice and eWayBill. Whether the confiscation order was passed without giving an opportunity of being heard. See, natural justice is one of the main principles on which our constitution stands. So, a person has to give an opportunity to the person against whom allegation has been made to defend their case, that why it has happened. There may be a genuine reason that my truck owner or my driver who is going to transport the goods have by mistake left the e-invoice or e-waybill. But if I can by phone, like we do, like WhatsApp and all, and I can show the invoice and e-waybill, then the officer cannot seize my goods or neither confiscate the same. Because as we discussed, for confiscation, one of the major thing which the officer need to prove is that there is intention to evade. If he can't prove it, he can't confiscate and he can't detain my goods or services or goods or conveyance. Now, there may be a case where by mistake it should be IGST. I have shown as C and S. It has been held on that ground also. Goods cannot be seized because obviously it's a revenue neutral case. There is no loss to the government. Similarly, goods were seized. They were not offloaded at destination but taken to further delivery point. All are based on the concept that logical way that there may be a situation where I have to unload the goods at some other place. So if I have that time, I can extend, I can change my eWayBill part B of it and mention a new destination. So on this ground, it has been held that you should not seize the goods. Obviously, you cannot seize, confiscate any goods on mere suspension. You have a doubt that there may be invention, but you don't have the proof that there is a evasion of tax. Then also you can't confiscate a good, because mere suspension that I am of the view that there is evasion will not work. You have to show why you thought that there is a evasion of tax. You must substantiate the same in order to confiscate. As already discussed, there may be a case that by mistake truck driver forgot to carry the tax invoice or eWayBill. But on that account, you should not miss. Basically, all these decisions are on the ground that officers should not come on a harsh manner on the SSE. They should give them an opportunity to explain if any ambiguity has arisen, why it has arisen. They should see whether there is any intention to evade the tax or not. So this is on this grounds, all this issue they have decided in the SSE favors. So whenever any of your goods also got caught or anything, any detention happened, you have to also view what's the finding of the officer and how you can submit your defense against it. As we discussed, this is a summarize of all the procedure which the officer need to follow and which also we need to comply. Like as discussed, when the goods are being intercepted, the first thing officer has to do, he has to record the statement of the driver. Then he will issue an order for physical verification of goods and conveyance, and will report the same within 24 hours of issuance of the order. Like as we discussed, when he inspect, he has to give summary report, which summary report will be on part A, which will be available on the portal. And after physical verification, he will give the final report in part B of EBW 03. If obviously 3-day time they have been given to physical verify. If they want more than 3 days, they have to make an application in GST MOB 03, and whatever the physical verification they have done, they have to submit the report of same in MOB 04 to the driver. If they do not find any issue, everything was fine, then they will pass the release order in MOB 05. If the officer, after inspecting, feel that goods or conveyance need to be detained, then he shall issue in MOV 06. And as we discussed, after detention, he will issue a notice in MOV 07 within 7 days, and you have 7 days to reply to that notice. You may either accept it, you may either submit your reply. Now, this part is no longer there. He cannot submit bond. So either I can submit my reply. After submission of reply, then the officer will pass the speaking order. And if he feels it is in our favor, then he will pass the release order in MOV 05. Or if it is against us, obviously he will not pass this MOV 05, only 09 order, speaking order he will pass, why he is not agreeing with us. Then it's upon us. We can either go for appeal, or they will go for auction, or if you want, you can pay the penalty amount, get your goods or conveyance released. So this was the whole procedure of detention. What will happen under section 129. Now, eWayBill, you can go for software. There are various things for eWayBill integration. You can use web-based system, SMS, Android app, bug generation. So it's very advisable to use the software because it will make your work easy. So with this, we come to the end of eWayBill. If anybody have any.
Any questions to anyone before we move on to eInvoice? You can unmute yourself and ask, or you can put your question in the chat. Okay, let's continue with e-invoicing. So I'm sure all of us are aware that the e-invoicing is there. The word e-invoicing, you are aware, it's been there for quite a long time. September 2020, it was made effective from 1st September for more than 500 crores. Of course, the first 1 month they have got a relaxation. Then the next era came from Jan 21, more than 100 crores. April 21, more than 50 crores. And now we are into the next phase of e-invoicing. The next slide. This is over 20 crores. The e-invoicing is applicable. I just want to spend some time on this slide because there has been a lot of confusion for many people and more uncertainty. First and foremost thing, when we say 20 crores, it is turnover in the any of the previous financial year. So any means starting from 2017-18. So let's say 18-19, your turnover was superb. You did a turnover of 30 crores. And post-COVID, your turnover reduced. You are doing a turnover of say 5 crores. And so now the question comes, my previous year turnover is 5 crores. In the financial year 22-23, starting from 1st April 22, should I do e-invoice? The answer is yes. Because the word used is any of the financial year. So in any of the preceding financial years, if your turnover exceeds 20 crores, you have to do the e-invoice. Again, second question people always ask is, what does this 20 crore turnover constitute? It is all the supplies, taxable, exempt, export, everything. Most of the time, people think that, okay, the 20 crores, I'll only be looking for taxable. Let's say an educational institution, 99% of their revenue is exempt, but they have an auditorium which they will let it out. They have the playground which they will be giving for some function, or they give some coaching which are beyond the curriculum. Very few amounts are taxable, and they give it to corporate doing some sessions. So, so in that situation, the e-invoicing would be applicable for those organizations. So this is the common mistake. Even people exceeding 50 crores, they have not done it. So I want you to check up the 20 crores in the previous financial year. 20 crores means total turnover, not the only taxable turnover. Please continue. Ashika, over to you.
So as Sir discussed, now from April 2022, persons who taxpayers who have having aggregate turnover more than 20 crore now to follow e-invoice. While seeing 20 crore, it's not that preceding financial year. All the financial year you have to see. If any of the year you are more than 20, then you are liable to e-invoicing. Now, another thing is about the aggregate turnover. Aggregate turnover does not mean only taxable. Like at the time of registration of GST for 20 lakh, we see each and every supply which is made. It may be exempted, non-GST supply, non-taxable supply, everything need to be considered, because it may be a case you are having 2 crores exempt supply, but even if you have one single taxable supply of 1 lakh rupees also, then you are liable to take registration. In a similar fashion, you are also liable in case of e-invoicing if your turnover exceed 20 crores. Now the persons, few persons, they have exempted even though their turnover is more than 20. That is insurance company, banking company, GTA, passenger transport, admission to film in multiplex screen, supply by SEZ, government department or local authority. When we say it is only supply by SEZ, not supply to SEZ. So it to be noted, it's by only. They are only covered under exempted category. Another thing which comes in the mind of the people who will be newly registering under e-invoicing, means who will be newly following for e-invoicing, is when e-invoice is to be raised for which basically it is applicable to B2B transaction. So invoice, credit note, debit note, which you have been raising from registered to registered person or for business to government. Even export they have also covered. So in this situation, invoice is mandatory to be issued. However, if you have made a supply for B2C, even though it is taxable, it will not be covered under e-invoicing. If it is a bill of supply exempted, not under e-invoicing. If purchases is from unregistered, then also not under e-invoicing. ISD is also not required to raise e-invoice for import of goods or services. Now, while you are
even on the earlier slide, because since e-invoice is new, people always think that what is applicable, what's not applicable. Just to clarify, taxable supply to a business user, e-invoice is applicable. Other than that, e-invoice is not applicable. Please continue.
Okay, who will be applying this e-invoice from April? They should take care that once e-invoice is generated, it cannot be modified. You cannot change it. However, you can cancel it, but cancellation can also happen only within 24 hours. If any error has happened and you don't come to know about it within 24 hours, then e-invoice once raised cannot be cancelled. However, what you can do, like while filing GSTR1, the option you have is to delete that e-invoice, so that you can say to the officer when they will come, obviously they will try to match whatever e-invoice you have raised with GSTR1, because e-invoice will be having specifically IRN number. So if they match, they might find discrepancy, then you can explain it to them as the cancellation time has been over. We were not able to do it. So we have removed the same, not reported in GST1, same also not form part of our books of account, and we are not liable to pay GST on the same. In this, once you have raised e-invoice, so obviously invoice number is generated, and that invoice, once one invoice number cannot be reused. E-invoice, obviously, there may be a case that you are standing in the month of March, and e-invoice of Jan Feb also you can raise in the month of March. So even backdated invoices are also possible to raise e-invoice. There will be QR code in the invoice. INR printing is optional. eWayBill is still required. See, by way of e-invoice, it's not the case that waybill is not required to be, because both have different purpose. eWayBill is for movement of goods, and e-invoice they are basically doing to track B2B transactions. Digital display of e-invoice is sufficient during transit. Like as we said that while carrying the goods, a person who is carrying the goods, person in charge need to have invoice and eWayBill. But in case of e-invoicing, if he has that digital one in that code, if he is having in the mobile, that also it will work. Physical printout is not mandatory. Few terminology we have already discussed while discussing about the earlier slide of text here. IRN, that is invoice reference numbers, one specifically which will be given to invoice. There is IRN invoice registration portal from e-invoice can be generated. QR code, e-invoice need to contain QR code digitally signed and issued by NIIC. It contains high level parameter of invoice. Login, if you have an eWayBill login, same will work in e-invoice, or you can create one another login. You can, for generating e-invoice, you can also use offline tool, or you can also use ASP, GSP or ERP to integrate or generate eWayBills, e-invoice. So with this, we will start for our e-invoice demo. Over to you, Azhar.
Yeah, before we go on demo, any questions to anyone on the e-invoice? You can put your questions in the chat, or you can unmute yourself and ask the question. Okay, Azhar, so can you share your screen and do one demo of how an e-invoice can be generated?
Yeah, sure, sir. Let me present.
There's one question from Harish asking whether QR code is necessary. Harish, wherever you are doing e-invoice, the proof that the e-invoice is done, you got to print the QR code which is issued by NIC on your invoice. So rule 46 has been amended, 46N. They have inserted saying that now QR code is mandatory. Now here is the Tally Prime. Tally Prime has given a free invoicing solution. However, there are third-party utilities which are with added features. People can use that. So yes, Azhar, you can explain and show.
Yeah, sure. Hi, everyone. Today, I will show you the live demonstration of generating e-invoice from Tally. So as you can see, once you have loaded that TDL into the Tally, you will able to get e-invoice module in the gateway of Tally script. This is the e-invoice module. So before that, let me show you the simple configuration to enabling e-invoice at the voucher level. So for that, we need to go alter, select voucher type, and select the vouchers that you want to enable for e-invoicing. And let me select the sales voucher here. Here you can see the additional options for e-invoicings. You can enable the option if you want to use this voucher for e-invoice. And second thing is QR code print position. If you want to print your QR code in that invoice, if you want to top position, you can make it as top. or else if you want to center, you can make it as center based on that your requirement. And the third one is enable multi-company address. So we can use this option if you are maintaining multiple GSTs in a single tally data. So once you accept the screen, so this is the simple configuration prerequisites that we have to do. So let me take you to that modules. Here GSTs and prime, then B2B e-invoice for e-invoice generation. Basically, B2B invoice have 4 modules: e-invoice registered, e-invoice generated, e-invoice pending, e-invoice cancelled. So in this e-invoice register, here you will get all the sales transaction. Also, we have given that color indicator so that you can trace that invoice whether which is invoice has been generated or not. As you can see here, blue green color is there. Blue indicates the voucher invoice has been generated for that voucher. Green indicates both IRN and eWayBill also generated for the same voucher. This is the generated module. Then, sorry, the register module. Second thing is generated. Here you will get all the generated vouchers, IRN and eWayBill also. And the third is e-invoice pending. Here it will display only the pending vouchers, which means these are all the vouchers yet to be generated for e-invoice. So e-invoice cancel. As Ashika ma'am told, we can have the option to cancel the invoice within the 24 hours of time. So if you want to cancel, you can cancel the invoice as well. So let me show you the process to create a vouchers and generation of invoice. So this is the voucher I'm creating. Selecting the party here. Select the stage voucher. This is the item list. So just save the invoice. So let me go to that Zen module, B2B e-invoice register. As you can see in the last, this is the voucher which I have created now. If you want to generate e-invoice,
So one point you can notice
the
that
voucher
this
by
is the
pressing
invoice
the spacebar.
generated on 1st March. So
Yeah,
right now he is generating an invoice to a transaction of a backdated transaction. Just to get the where Ashika was giving an example, we are going to see this live. Yeah.
yeah. So I am selecting the last invoice to generate the invoice. So once you have selected, you can able to see this option here.
Before Azhar, before generating e-invoice, can you just show the preview of this?
Yeah, sure.
So zoom it. Yeah. So you can see, everyone can see that this is like a normal invoice, tally invoice, which we all been seeing, which we've been using. So post e-invoice, how the invoice has to be issued is what we are going to see now. Now, can you generate e-invoice for this?
Yeah. So press spacebar, it will select the voucher, then click on upload invoice. So hardly it will take 2 seconds to generate the invoice. Yeah, once it is generated, you can able to see the status also. It is changed to blue color, which means that IRN has been generated for that invoice. Here you will get the status of that invoice. This is the 64-digit IRN, then the UID and the acknowledgement status. Let me show you the print preview also, how the invoice is. So once that invoice has been generated, you can able to get the IRN and acknowledgement number and the QR code itself in that invoice. So that you can say this is the valid invoice.
So a couple of things I want you to know. Can you just scroll again? Scroll up, zoom in, preview.
1 minute, sir.
Yeah. So if you see on the top, you have the IRN. Next to invoice number, the eWayBill section is there, which is blank. So eWayBill is not generated for this document, but e-invoice has been done. This is the QR code which is mandatory to be printed. So Harshit, your question was the QR code required? Yes. This is the proof that you have done the e-invoice. Azhar, can you enter the vehicle number and do a eWayBill to this and again show the preview of this invoice?
Yeah, sure.
So the participants here is where Ashika was mentioning there are various modes of generating eWayBill and use of technology. So all that Azhar would be doing in the vehicle number, he will be entering the vehicle number. Distance is automatic. So the moment I enter the vehicle number, so it is presuming that eWayBill is required and the goods are moving from Karnataka to Karnataka. So whether it is regular over dimension, it can be set. Yeah.
So once you have entered the vehicle number, again you can select that invoice and click on generate eWayBill. So that eWayBill is generating. As you can see, that status also changed from blue to green, which means that for the invoice, eWayBill also been generated. Let me show you the print preview. So this is the eWayBill number which is printed on that invoice. Also, we have one more template called eWayBill print. So this is the eWayBill print which is happening.
So in one go, on a press of a button, you are able to generate eWayBill. Now, technically, you will not have any human errors. That invoice number is showing X, and in the eWayBill portal, one was doing a data entry, a wrong data entry. All those errors are avoided. Second, you are also saving a lot of time. Today, eWayBill one has to generate. You go to eWayBill portal, and it will take at least 5 minutes for you to complete the transaction. But now, in a fraction of a seconds, the eWayBill and e-invoice is generated. When you use the technology, that's all the time it takes to actually have a transaction be done. Any doubts to anyone? Other, you can show cancellation also once.
Yes. So if you want to cancel any invoice within the 24 hours of time limit, you can go to the invoice generated module. Here you will get all the generated invoice. I am selecting the first last invoice to cancel. For this invoice, eWayBill also generated, so that we have to first cancel the eWayBill. Then we can cancel that IR. So now that eWayBill also cancelled, you can see the status also. It is changed to again blue color. Now we can cancel that IR, which is cancel invoice. So it is happening in the fraction of seconds. You can see that once wait, I'll show you. So once it is cancelled, you can able to see the voucher in the cancel mode. So it will show IRN is cancelled for that voucher. So any questions to anyone?
Mr. Vadivel, you are asking how to link e-invoice in Tally Prime. Can you, are you asking the e-invoicing solution given by Tally Prime? If that being the question, we cannot demonstrate it live because Tally Prime do not have a sandbox version. It does it is a live. So right now what we have shown is through an ASP who connects to an sandbox portal of NIC and it is generated. In Tally Prime, it is like it is real time. So you have to, the process is more or less the same. Once you do the configurations, it will be automatically done. Azhar, do you have any login of the e-invoice NIC portal?
No, sir.
Okay. So once you log into the NIC portal, you have to create an API user and we can catch up offline if you have any case where we can where you want us to create, we can help you in creating, but it is it has to be done live. So they Tally did not give a feature to add an additional fields or also add to a sandbox. So that in Tally, it only connects to the live portal and only live transactions. Yeah. So Shriram, GST is an prime. It's an add-on. So there's a small add-on given by the GST Zen. So that needs to be taken. Question from Ambika is, if we unable to generate e-invoice due to GST website issue. Amika, I would ask you a question back, is if the eWayBill portal is down, what were you doing? It's like you will be waiting for the portal to up. Answer is same. You will be waiting for the portal to up. Now you want to conduct the business transaction, you can go ahead and issue regular tax invoice without the QR code, but whatever be the time interval where you can do the invoice, you should go back and do the invoice by then. Maybe internet is down, your system crashed, could be any reason. I agree. So you will have to do it at a reasonable possible interval of the time. That would be my answer. Question by Harish, how to generate QR code? Harish, this would be done automatically by the software. The software automatically generates the QR code. You are not the one who is doing it. So the moment you do the e-invoice through whichever is the solution provider does the QR code for you.
Yes, sir.
Okay. Any question? Okay. Let me unmute. Yeah. Okay. Then there is a next question by Nandini. Will the e-invoice be automatically updated in GST portal? Again, the answer is yes. So the moment you generate e-invoice, this data is automatically reported into GSTR1. However, for reporting into GSTR1, the GSTR1 period should be open. What do you mean by GSTR1 period should be open? Let's say today we are on 26th March. I am generating an e-invoice dated February, and my February GSTR1 is already filed. That data will not be reported in GSTR1. On 26th March, I have generated an e-invoice for 1st March, 2nd March, or 25th March, or 26th March. This data would automatically get reported into March GSTR1. Let's say in April, 1st April, 2nd April, 3rd April, I am generating an e-invoice dated 31st March, and my GSTR1 is still not filed. Because my GSTR1 for the month of March is not filed, the data will travel and gets reported into March. When it will not get reported, let's say on 6th of April, I have filed my March GSTR1. In such scenario, on 8th April, when I generate an e-invoice dated March, that would be captured into the NIC portal, but that will not be reported into GSTR1. So these are the multiple scenarios where the data traveling to GSTR1 from the NIC portal. Hope your question is answered, Nandini. Commercial transactions made to customers, can we raise an e-invoice? B2C, there is no concept of e-invoice. E-invoice is applicable only to a B2B. Taxable supply to B2B, only e-invoice is applicable. Exempted supply to B2C or a taxable supply, exempted supply to a B2B or a taxable supply to B2C, no e-invoice required. That answers your question, Bharti. Any other questions? If we raise backdated entry, is that invoice valid? Prajwal, yes, invoice is valid because you have complied with the law. Just show us how to enable e-invoice for the first time for a company. can you go to Azhar? Can you go to NIC portal, please?
Yeah, 1 minute.
So Ashika has shared in her screen couple of URLs. So just type eInvoice NIC. Yeah, eInvoice1.gst.gov.in. Yeah, so here is the portal. On the right side, you can see the login. Click on the login. If any one of you have an eWayBill, your eWayBill username password is the the username password for eInvoice portal also. And if you do not have, down you have next to the login you have register. So you close this. Yeah, no registration. Yes, the portal login. Yeah. So here you will be entering your details and you will be getting an OTP. Basis that you will be doing the eInvoice. Sriram, hope that answers your question. Prajwal, we raised invoice backdated. In which month it will reflect and how to pay tax? Prajwal, GSTR1, e-invoice, all that are independent. See, e-invoice, the way I want all of you to relate is you are generating an invoice and giving it to the customer. In the e-invoice scenario, the expectation is you generate the invoice, get an acknowledgement from the government and issue the customer. So it is not changing your time of supply. You will continue to pay the taxes irrespective of your invoice dated. Your section 12 and 13 of the act continues when you have to pay the taxes. Hope Prajwal, your question is answered. Any other questions? All right. Azhar, is there anything else on the invoice that needs to be covered?
No, sir. That's it.
Okay. Parth is asking, in case where the invoice is not done for B2C, invoice can never be done for B2C. GSTR1 JSON file uploaded to the portal. Should we fill the table manually? Yes. The table 7 of GSTR1, you will have to do it manually. Rajalakshmi is asking, e-invoice can be raised in bulk at the end of the month. Answer is yes. Azhar, I request if you have in the tally 2-3 invoices where you have to do e-invoice, or can you just go back to tally, please, Azhar? Azhar?
Yeah. Yeah.
Azhar, I'm
So we
still
have
seeing
to
the NIC portal. Can you switch to tally screen?
1 minute. So yeah, I'm in the tally screen. Can you see the screen, my tally screen? If okay, when you put it as yes. Okay, thank you. So if you want to generate e-invoice with the bulk option, select the invoice which you want to generate for invoice and click on the upload invoice, it will be generated. This is not an issue. We can generate e-invoice for bulk also.
Azhar, you can select 2 records in one go and generate an invoice. You have
Yes,
shown
sir.
that?
Yeah,
Okay.
already shown. Yeah.
My internet got lost.
Okay, no.
So you have shown 2 invoices. So which means the Rajalakshmi madam, so you can select all and press a button in bulk, it happens. So whatever sir, suppose any system problem or internet issue, whenever the internet is up, whenever the system is resolved, do the e-invoicing.
Okay, sir. That's it from my side. Is there any...
So there's a question, can e-invoice be done on a quarterly or a monthly? Answer is no. I am only saying that in an exception situation, when the system is not available, you can do a post-dated. So Rajalakshmi madam, I would say e-invoice has to be, okay, by the way, rule 48 sub-rule 5 says, if you are issuing an invoice other than with a QR code, technically it is not a valid document. So when you are not issuing a valid invoice, you are liable to pay, you will be subjected to a penalty under section 122 for each document or each time when the inspection is done up to 10,000 rupees. So it's always recommended to do e-invoice the moment you are raising the invoice. That all the data
Sir, I think your
on the
voice is
portal and
breaking.
upload your GST will be happening is now going to say whether the source of it, whether there is an IR into it or not. So I would suggest not to reset the data and upload the tally thing. So then the purpose of e-invoicing would be lost, and sometimes you may end up issue if there are big suppliers and the dealers, they may say that no e-invoice is not done for it. You will get into a payment related issue. Okay, if you generate e-invoice at the month end, then the GST officer can ask while transporting the goods. Of course, when you're transporting the goods, eWayBill is required. Harshit, I would again suggest people not to get into this generating late. Those conversations, let it not be entertained. Okay. So I guess all the questions on e-invoice is answered. Let's move on to the last topic of the day. Okay, there's one question, sir. We raised the invoice, filed GST R1. We want to cancel the invoice. We have, Azhar has shown you how to cancel the invoice. I didn't get you the question, Prajwal. By the way, cancellation is only within 24 hours. If you cannot cancel within 24 hours, as Ashika said, please go to GST R1 and manually delete that invoice. Oh, okay. Thank you, Azhar. Thank you, Ashika. And let's move to the next part of the session, which is on the tally. Friends, tally is also like Microsoft Excel. Most of the time we think that we know everything in Excel, but every time someone tells us something, we realize there are a lot of unexplored areas in Excel. Likewise, tally, we don't really use many features in the tally. So uh, today we will be seeing from from Nikia on what are all the features which are generally not being popularly used in the tally. Again, as each topic is being taken by her, each feature she demonstrates, you can ask your question.
Okay.
One question from Sujata, can I do e-invoice for more than one company in a single system? Of course, yes, you can do from one. It is not system dependent. Like in your one computer system, you can have 10 different tally data. So each tally data different e-invoice possible. Yeah.
Okay.
Nikia, can you share
Yeah.
your screen?
Yeah, I'm sharing. Just a second. Hope everybody is able to view my screen.
Yeah, visible.
Okay. Okay. Hello, everyone. Today I'll take you some of the features which are not mostly used by the users. So the first topic which I will like to take you is the mark vouchers. Mark voucher is a feature in Tally, generally can be used. What instances I can say, most of the businesses take the help of the consultants for filing their returns. So what do? They share the data with the consultants and they do some changes in there, whatever related to the filing returns. They pass entry or modify. And again, manually, what the customer do is they, as per the consultant's entry, they refer the backup data and pass those entry manually into their original backup, original live data. So here in Tally has given one feature which mostly most of you must have not aware of that feature, that is called mark voucher in Tally. So how to enable that feature I will show you, and how to use it. This will be helpful mostly for the tax consultants and the other auditors also. So you can see there are two Tally I've opened here. One is this one company, which I just for reference purpose, I've kept as mark voucher, M is as no. And the other company, it is the same data which I'm having. So I'm given the backup to the auditor. So this company is there, I've given to the auditor. So what we need to do is the original live company wherein the customer is using the day-to-day transactions in their data. In F11 features, I'll press F11 feature. You can see this option, mark modified voucher. This option will be set to as no only in the live data. And the data which we are giving to the auditor or the consultant has to enable this feature to yes in their backup data, so that it will give you a track of all the modified or any added vouchers in that data. So this company, I'm keeping it as no, and the other company, I'm keeping it as yes. Enable multiple, mark modified vouchers to yes. Just I need to set that option to yes. Okay. Now one entry I can show you in my original live data. This is my original live data where you can see the company name is Agarbatti Company M. No, this is the data which the user is having with him. So I just open one sales entry. Okay. This one sales entry, I have a transaction in May. I'll take it to April. So this one transaction, the first entry is showing me as the quantity is numbers is 100 and rate is 34. The value is coming up, total bill value is coming as 4092. Okay. And the same bill, I'm modifying it in my auditor's backup. The auditor's backup is this. I have the same invoice. I'm going into statistics. Go to sales. Not only sales, any of the vouchers you can alter it. I'm just showing it. Any vouchers which has been altered or added up, it will give you the list of vouchers which is altered and added. This, I'm opening the same entry over here. I'm just making a slight changes in this. I'm just enabling a reference over here and giving a reference, and will change some value in that entry. Okay. This 100, I just make it as 34.5. Any changes you can, whatever for the tax point of view, any changes, whatever, any adjustment entry if they pass, the tax entry, the GST payable entry, any entry if we pass in this backup data, which is shared to the auditor or the tax consultant, you just need to enable that mark vouchers option in the F11 features and do the necessary changes, whatever as per the filing purpose. I just accept it. Okay. I have accepted it. Now, once all the entries, whichever is amended or whatever entries have been added, I will just, where that can be seen, where that can be viewed, that report, I will show you. You need to go to display exception reports. Okay, you can see here mark vouchers. So if you see, click on the smart voucher, you can see the list of all transactions which has been added or altered. Now you can see I've altered one of the entry, which is showing here as 34.50. Okay, I will pass one more entry here. I'll pass one GST payment entry just for a purpose. For the April month, I'm making a GST payment entry. I'm just putting some value for it. This is the IGST. So this is a payment entry which I passed in the auditor data. So again, if I go into this display, exception report, and mark vouchers, you'll get to see the list of all added and altered vouchers. Now, what you can do is either you can export this data, like generally you can click on this export and export current. Whatever location you can configure it accordingly, where do you want it to export it. So this is a location, this is a general export option. Generally you people export the reports into Excel, the same button you can use it. Only thing you need to go to that mark voucher register and export the transactions. So this is the default XML format which has got created. I accept it as it and send it. So from here it has gone removed and it XML. So this register has been removed. So if you want to see the history of the altered vouchers or added vouchers, you can see there's a button called export history. So it will give you the list of count of the vouchers which has been added or altered by the consultant. Okay. So these are the two entries you can refer here. So I'll come back to my original data, the customer's data. This is Agarbatti company, mark voucher is set to no. Okay. What I can do is, I will just do import of data. Okay. I'll come to transactions. Okay. I need to give that path wherever that file. The auditor will either can send this XML as a on mail, and you can download that XML and import it into your data. So whatever transactions, any alteration the auditor or consultant has done with respect to the filing purpose, you can update the same transaction as is into your without a manual intervention. So that is a benefit of this feature. I will just import it. It is importing. So the entries got imported. I'll go to display statement of accounts, statistics. I'll go show you the first sales entry. You can see the rate of the invoice, which was originally as 34. It has got changed to 34.5 without any manual intervention. And one entry I passed, that is a payment entry. That is a GST entry. It has got updated in my live data also. So this is the feature which you might not be come across it. This would be more beneficial for the auditors and tax consultants who does the take the backup and do the changes, update or pass any adjustment entry. They can use this feature and send it to their customer so that they can import it and get the updated entries into their data. Is there any question related to this? Okay, here one more thing I want to mention is it will not help for deleted vouchers. It is only that you can add any vouchers added or altered vouchers will be updated. No deleted voucher, there would be no trail for any deleted vouchers. You cannot do anything for that. That's it. Shall I move to the next topic?
Yes, please continue.
Okay. Second is the interest calculations. Many a times we raise bill or we the past purchase invoices, the creditors charge interest to owners, or we may charge interest to the customers on overdue payments. Okay, so we can track, or also even if you are taken a loan or you have lended a loan to anybody, you can calculate the interest in Tally. That feature is available in default Tally. So how to activate that feature and how to use it, I will show it to you. Let's see. I'll go to F11 features. Okay, you can see here enable interest calculation. I will enable this option and save it. So once you enable that option, you can go to any customer ledger or any bank ledger or any creditors ledger, open here, select any particular ledger. So you can see here, this option gets activated, activate interest calculation. So I will set this option to yes. Calculate interest transaction by transaction. Means for each and entry added to it, do you want to calculate the interest? For that purpose, you need to enable that option to yes. Override parameter for each transaction. Like this is once you have enabled the setting that it is 1% flat, 1% for all transactions. For exceptional case, for one of the bill, you don't want to charge interest, or you may have to charge less interest, what is defined in the predefined masters. So if you set this option to yes, user will be able to modify the rate of interest or whatever case may be. You can modify at the entry level when you are booking the bills or whatever may be the nature of transactions. If I keep it to yes. Include transaction date for interest calculation, that is for amounts added and for amounts deducted. This is like a net of figure. So whenever you raise the bill, there is always an additions and always a deduction. Deduction in the sense if you receive a payment, so whatever the balance is there, on that the interest has to be calculated, or if there is a credit note has been passed or anything. So whatever that figure is there, on that basis, the interest has to be calculated. For that reason, we need to enable this option. And you can set the rate of interest, whatever may be the rate of interest. I've set it to 1%, and here is the interest style, how you want to calculate it. Generally, as a general, it is kept as a 365 days per year, but you can keep it as per calendar month or calendar year. The 4 options is given here. And this is on all balances or only the debit or credit balance, depending on the nature of the ledger, whether it is a customer or it is a vendor. So currently I keep it as whatever balances as on that, I'll keep it as all balances and save it. Okay. So if you see, I pass some sales entry, outstanding. If I go to receivables, for this is receipt, I have outstanding of 4,148 rupees, and it is overdue by 56 days for Agarwal Automotive. Okay. Now there is one more report, statement of accounts, interest calculations. There is payable and receivable. If it is debtors, it is has to be collected here. I'll pass one more entry. Oh, you see, as I said, I have set one option, override parameters for each transaction. Because I have set it to yes, I'm able to edit the override the existing parameters which have defined in the customer ledger master. So in a case that you don't want to charge interest on this particular transaction, or you want to reduce the rate of interest for only particular this bill, you can amend it at the time of entry, or default it will capture whatever is defined in the customer master. Okay, so I've saved this entry and I will go to display statement of accounts, interest calculation, interest receivables, sundry debtors, automotive, private limited. It is showing me a figure of 16.69, which is interest due from that particular customer. And when I drill down, it will show me the bill wise details. Okay, 16.69. So this will just give you a calculation of the interest due to give the effect of that particular interest, and which is collectible or which is receivable or payable. We need to pass a separate entry, that is either to through debit note or through a credit note. For that, there is a setting how it has to be passed. I will show you. This is just giving you a interest calculation of the which is amount due from the customer along with the amount bill amount receivable. So how to account that interest, there is a setting which we need to in voucher type. Either if it is receivable, we will account as a debit note. I'll go to voucher type, debit note, and I'll have to create a class for interest. You can give any name over here. Interest calculation. I'm creating a class under the debit note voucher type. And you need to see, enable this option, use class for interest accounting. I will set this option to yes. Amounts to be treated as compound interest. You can calculate, by default, it will calculate as a simple interest. And in case you want to calculate as a compound interest, you can set this option to yes. I will accept this as it is and save it. So I will go to accounting voucher, other vouchers. I'll select debit note. This is for that Agarwal Automotive. I'm passing an entry where it was showing a 16.69 is due, the interest amount which is due. A debit note, interest calculation class I have selected. I need to select the customer. It will show you all the bill wise interest due from that particular customer. Okay, this I have to change this 20th May. I will just change the date. Whatever date you are booking, it's at the month at the end of the day or the same day you can book it. Based on the days, you can see the interest calculation is changing. That 16.69 was showing me as on 5th June because my current date was 1st April onwards to 6th June. Sorry, 5th June. So it was showing as 16.69. Now as I changed my voucher date as 31st May. So the as on 31st May, what basically it would be based on the credit days which whatever you have given to that customer. If it is overdue, based on that, it will calculate the interest parameters. So I'm just selecting that list from the drop down, accept it as it is, give the reference for the debit note. This it is showing me the parameter, and I'll select the interest ledger or whichever ledger. I'll have to create one ledger where you want to need to account that interest receivables. Okay, I'll just show it as indirect income, whatever you define it, you can show it as accordingly, accounting norms. However you want to show it, I just save it. This way it will account into the Agarwal Automotive's ledger account. It will hit the ledger of the automotive. Otherwise, it will just show as an interest calculation. Now you can see it as 11.78. It has hit the Agarwal Automotive Private Ledger. So it is now collection of the total amount has to be received from this particular customer. So now whenever the payment is received from the customer, you can directly pass a normal receipt entry. it is the same how you pass a receipt entry whenever you receive the payment from the customer. So on 6th June, if I'm receiving the amount from that customer, I'll select that ledger. It will show me that listing from here. This is 11.78 for the interest, and the against reference for that bill, I can select this and pass it. This is a simple entry. There is no change. Only thing what I've done is to record, to give the effect of that interest to the party ledger, I've accounted a debit note using the voucher class option given in Tally. So that will, if you just generally pass a debit note without a voucher class, then that is also possible. But in that case, what happens? This simplification, like getting the drop down of it is pertaining to which bill or what is that tracking, you will have to check for bill wise and then pass the entry. If you go by the voucher class method, automatically it will give you the bill wise listing against which bill it is has calculated this particular interest is there. You will get to see the list of the transaction from the drop down itself and save the entry. So this is one of the feature which might not be used in aware of it. So you can use this interest calculation in Tally. So that report is available in display, statement of accounts, interest calculation. This will be available only if you enable that feature in F11 features as enable interest calculations. This is second topic. Is there any question in interest calculation? Okay, shall I proceed with the next topic?
Yeah, yes, ma'am. I think no, I have no questions yet.
Okay. The next question topic is forex transactions. Many people, they do involve in exports and imports. So there would be a multi-currency transactions takes place. So Tally has a feature where we can maintain forex currency transaction as well in Tally. So in that case, same, I will activate that feature from F11. Sorry, the feature is currently in Tally Prime. You can directly go and create a forex currency in Tally. It will get activated automatically when you use, because earlier in Tally ERPN, there was an option provided in F11 to activate multi-currency feature. Now you directly go in alter screen or create screen, go to currency and create a foreign currency over here. I've created dollar. Dollar is already available. I'll just show you. I've created one currency. This is dollar, US dollar. I've given it. Now, how to record a foreign transaction and how to view the ledgers in foreign currency, that I will show you right now. I am going into a sales voucher. It can be purchase or sales, whatever may be, because day to day basis, whatever based on the exchange rate, it will calculate the gain loss. So we need to adjust that gain loss accordingly at the end of the month or whatever to show our P&L and balance sheet, give a right figure of it. So here I'm passing one sales entry. I'm selecting a foreign customer. Okay. I just save it. If it is a services, that can be any service invoice or a inventory invoice. And now while recording, you should keep in mind, when you're recording a foreign currency, you need to pass the invoice in foreign currency value. I have selected dollar and $105 rupees. Here you can see, as soon as you enter the value in foreign currency, the rate of exchange shows. You need to put the rate of exchange as on 10th June, what was the rate? As on current date, what is the rate that you need to put? So I just put a value of 78 on an average. Just I'm putting some rate over here. So it calculated it. I'm just saving it as is. I've saved this entry. Now, if you go and see this customer ledger, Forex customer, it will showing me the value in INR currency. Okay. But if you would like to see what is the current outstanding based on dollar terms or foreign currency, you can change the view by basis of this one, a basis of values. Here you can see show Forex transactions only. So if I set this option to yes and press Control A, it will show me the value in dollar terms, which is recorded in dollar terms. So this value is showing me 105. I press escape and come back again. Now that same 105 is shown me as a INR 8,190 rupees. Now, one more thing you can see here, it has calculated a value called 163 rupees as unadjusted. That is for as per my previous transaction. It is showing me a gain loss value. Okay. So now what I will do, I will pass one receipt entry for the current bill which I have passed. That is for $105. As on 10th, I had raised invoice. On 15th, I'm receiving the payment. Okay, I just change the receipt voucher. I'm selecting a bank ledger here. So I select that for a foreign customer. It will give me the list of bills which is pending. I'll select that $105 bill. And here it is again asking me an exchange rate. So what I will do is, as on 15th, whatever is the exchange rate, I will mention the exchange rate over here. So my sales value was 78. At that time, the exchange rate was 78. Now, the whatever maybe it will be higher side or lower side, you'll have to amend it. 78 point. So suppose I change it by 0.50, 0.50. So there is a income gain from this particular transaction. So I save this. These are our basic details. I've saved it. Now again, if you go to that particular customer ledger, display, account, ledger, Forex customer, you'll see that unadjusted Forex gain loss has changed and it is showing me a figure of 215.60. Now 250.60, if I drill down, it will show for which all bills it is showing, date wise. It is showing for this bill number 3, bill number 4, and bill number 6. 3 bills, total this much is my unadjusted gain loss. So in order to remove this, because this gain loss, we cannot keep endlessly show it in this way. We'll have to close it daily basis or month end basis, generally however you would like to follow the method. For that, there is a prescribed method in Tally. Only using that method, if you follow, this unadjusted gain loss will not be displayed in from the ledger. Now, same unadjusted gain loss will be appearing in your profit and loss also. Balance sheet also, everywhere it will appear. You can see here unadjusted gain loss, it is appearing here. To go to profit and loss, that gain loss is appearing. Now for adjustment, what is the prescribed method? For that, you need to go to, generally what we do is we pass a journal entry and just show it. Okay. But still, sometimes if you're following this multi-currency feature, then you have to follow this prescribed method. Then only you will get able to get the ledger details in correct manner. Otherwise, always that unregistered gain loss will be reflecting in your books of accounts. So how to remove that unregistered gain loss from your books of accounts? By using the prescribed method by the Tally. So for that, you need to go to alter voucher type I'll go to journal. Okay, here I'll create a class. You can give any name, gain loss or foreign exchange, whatever, anything you can type it here. And you need to enable this option, use class for forex gain loss adjustment. By default, it would be no. You will set it to yes and select the ledger which you have created for adjusting the gain loss amount. I've created a ledger called foreign gain loss. I will select that particular ledger and save the journal voucher type screen. So after that, we'll come back to vouchers. Select F7, that is journal, and I'll use that voucher class, gain loss. So 15 June, if I see, change the date of 30th June as suppose for the month and year, adjusting and closing that gain loss accordingly. Foreign gain loss, you have to pass customer wise the foreign gain loss. I mean, it will show the all customers you can record in single journal itself, or you can pass separate journal entries customer wise. That is visible, but the prescribed method is you need to create this voucher class and set that option to yes, use for gain loss adjustment. I select that particular foreign customer. It is giving me the breakup of all the pending, the unadjusted gain loss against the bills. I will select one by one. Automatically, it is taking whether it is debit or credit, whether it is a gain or loss. It is Tally itself is considering it. We need not worry that it is a debit or credit. It will take it automatically. So I save this entry. Save. Now, if you see the ledger of foreign customer, you can see that gain loss has gone away from the display. So that has got adjusted and the JV have passed. So if you pass a simple JV, if that unadjusted gain loss will not be removed from this screen. So this is a prescribed method given by Tally when you are using multi-currency in Tally. So this way, if you follow, it will help you to maintain multi-currency accounts in Tally and get the outstanding. You can send the outstanding to the foreign customer as in foreign customer forex currency also. So that using this forex transaction only feature. So this way you can send the ledger balance to the foreign customer. This is your outstanding or whatever status is there, you can send it to the foreign customer in the forex transactions. So this covers the forex transaction in Tally. Now, customers who maintain inventory in Tally mostly have seen that stock summary is there. There are many inventory related reports in Tally, but there is a feature called, a stock query in Tally, which will give you a product wise the history of that particular item. That we will get it to see in the stocks query report. You can go to this go to button, simply type stock query. These are the products, whatever items which is there in Tally. You can select any of the entry, item. Now you can see this is a stock query for that particular Mangaldeep lavender 100 sticks. So this is grouped under finished goods. The closing balance of that particular item is 2000 numbers. The cost price was 11.60 per number. Costing method used for this item is average costing. Standard cost is this. If there is any part number or category defined for this, it will show here the closing value of that particular item. It will show it here. And it will show the transactions over here. This view, I will just change it. This particularly it is appearing as a vertical format. This would be more simplified way. You can see this purchase and sales per transaction for this particular item. Now there is no purchase and sales showing as of now. You can change the period. If for this, there is no transaction. I can switch to some other items from here itself. Now for this fragrance materials, this you can see there is a purchase. It will give you a complete history when it the last purchases from which vendor have you purchased this particular item. It will give you a track of it. So accordingly, you can refer, take a call of which are the vendors available for this particular raw material or which for this particular item. So it give you a bird's eye view of that particular item, giving all details of that particular item, purchase and sales, if it is having in which godown it is lying, or what is a you're maintaining category wise stock group. You can get to see in this stock query report. This is one stock query. The next which I would like to take is many times what we have the godowns. Sometimes there is a job work processing is happening. Sometimes the goods are sent to the job work godown, or sometimes our premises is acting as a job work premises for other parties. So the other party materials comes into our place, or there could be an instance our stock is going to the outside party for some job work process. So what we can do is we can maintain those stock also into our tally by creating the type of godown, so that it doesn't affect our regular stock inventory statement. How is that possible? I will show you. What you need to do is you need to create a godown. Just create a godown called if first instance what I can take is the third party godown stock is with us, which has come for some job work. So I'll create outside party, or you can whatever name you can give outside party. This is the godown name I've created. And here you can see these two options. Now this two option by default doesn't appear. Sometimes it may not appear in your tally. How to enable it, that option? When you open a create a godown, you need to press F12 configuration and set this option, last option, enable third party stock details. This you need to enable. And when you set that option to yes, you get to see these two options here, use for our stock with third party and third party stock with us. Now, here I will enable the second instance first, third party stock with us, and save it. Now I'll take it to the stock statement, stock summary, finished goods. Okay, any product I will take. Mangaldeep. Now you can see Mangaldeep Sadhvi 100 sticks it is showing. Okay, these are the stock. Any item you can take. Finished goods is showing me a value of stock quantity 1,41,911 numbers. Now I'll create one item which has come from outside for some job work process. Numbers. Okay, I just save it. So I'm receiving that item. What I will do is accounting voucher. I just pass one receipt note. Any vendor I'm selecting. What I will do, I will select that raw material. I'm receiving that item in into my books, because that is now here you can see these are the godowns listed over here. main location, outside, and job work. Just I have created a dummy go down over here. So this is the one which I've created now. Outside party. I just put some numbers and rate, whatever rate they have sent it, I'll just put it. Accounting, save it. Okay. 100 is the quantity added. Now, if I again go back to stock summary, finished goods or raw material, it is not showing. That particular item is not showing. Why? Because actually that stock is not ours. That stock belongs to the outside party, but it has come to our premises for some job work process. So you can see that item is not reflecting over here. My stock quantity finished goods was 1,41,911, and here it is this one. So there it is not showing. Now how to see that particular this one item over here. Now you can see this basis of value. Sorry. Change view. X. Go to stock summary. Basis of value, you can see go down type, our stock with us and third party. This if you set it selected and you can select the option. Now outside party, what are categorized as third party stock with us. So if I select this and save it, now it is showing those items and which I have created here. The other items are not appearing, which is our stock. So this is how you can also get to see the stock statement for the outside material which has come to your premises. Similarly, your material if it is gone outside for some job work. So, and the job work location, how much material is lying in that particular godown, you can analyze that particular this report in that way. So this is the feature which is available in Tally. You can use it wherever there is a some movement is happening because of job work or any kind of nature of transaction. You can use this feature and get the report. It will not merge both stock into your current regular routine stock statement. So that is third party go down option in here. Now I will take the topic wherein price list. Sometimes what happens, you can fix the selling price to the customer based on the category they belong to. Like if they are a wholesaler, if they are a retailer or any category, any kind of thing, you can segregate your customers and fix the selling price to that customer. So how you can do that? That is a feature called price list in Tally. You can maintain price list customer wise. So if there is a very important customer, you can create a price list and define the rates, and you can also define the discount into that particular category customer. So how to activate is that I'll go to create price levels first. So for example, I've just created 3 price levels in this company. Wholesaler, distributor, retailer is just a typing. Fourth one, I can just create a normal consumer, like an individual customer, like that. You can put that. So I've created 4 levels of price levels. Save it. Okay. So now once that is created, you'll go to alter mode and define the price list. Or you can go to create. price list. Here you can see the list of stock groups it is appearing. Now you can define either for all items together, or you can go by the stock groups created in Tally. If I select finished goods, it will ask me which price level you are creating for, whether it is for retailer or it is for the wholesaler. So if it is a wholesaler, what generally is that they purchase in bulk. So a huge quantity would be purchased by them. So you can give a discount for that particular customer. If they purchase up to 10,000 quantity, this is the rate you are going to fix it. If it is more than 10,000, this is the rate you are going to fix it, and this is the percentage. This is how it works. So I'll just select wholesaler, and I can define the applicability for the selling price, and this can be amended as and when if you would like to change the selling price. So I will define a rate as on 1st April. You can see for 2 items I have defined. This is first item. I've defined a rate. If a customer is falling under wholesaler price level, what I have defined is if he purchases 2,000 numbers, I'm defining the rate as 15 rupees per numbers. And if it is more than 2,000 but less than 5,000, I'm giving, I mean, as far as the quantity level raises up, and the rate of the item reduces. This is how generally it works. So 13 rupees, and even you can define a discount for this. For 13 rupees, if he is purchasing more than 5,000, you can give a 2% discount or 5% discount. You can define. And right hand side, you can see based on the purchase and the last this one, it will define the cost price for this. Similarly, you can go on adding the items over here. I will add next item, this one. Similarly, I will add 2,000. Any quantity you can define. If this is 14 rupees, if it is 5,000, this would be 12 rupees. You can go on defining. There is no limitation. That is based on your decision. You can define the price list to the price level wise. This is for wholesaler I have defined. Similarly, you can define for retailer the levels, whatever. I have defined retailers different selling price over here. Okay. Now, how to record an entry and how it will automatically fetch the value. Means user need not think what is the rate has to be given for this particular customer. So what I will do is I will pass one entry and I will show you how it works. I've created one customer, this customer. On this customer, there is a tag. Either you can define that if you are categorizing that particular customer into one particular price level, you can go to the customer master and define the price level here itself, whether this customer is categorized under wholesaler or distributor or retailer. Whatever base, if you define, it will fetch the value directly from there. Or else you don't want to set it here in the customer master, you keep it as not applicable. Okay, then when you keep it as not applicable, Tally is giving you one more option that at the entry level, you can select the price level which you would like to charge the customer. If you are charging, putting this customer into as a retailer, you can select it as a retailer and select that particular item over here. I selected this 100 sticks. Okay, I select the go down. You can see how the rate gets changed here. Now, what I've defined is 0 to 2,000. What was the price? It will fetch like that. It is showing me as a 14 rupees. If I go back and change this quantity, and I change this to 2,500, sorry, 25,000. Now this value is about 5,000 quantity. So the rate has gone changed to 13 rupees. This is based on the levels which I have defined in the price list. Okay, so I just save this. That's it. That are the normal GST, SGST, whatever applicable. So this rates, even if you define certain discount, it will calculate here discount also. Okay, I am just saving it. Now, due to some market situation, you feel that you want to revise the selling price of for the customer, or it may be increasing the price or maybe reducing the price. That is also possible. What you can do is you can come back to alter.
Yeah,
to
we
price
can
list.
now pause for some questions.
Yes.
Again, I don't want too much of the knowledge overload. We'll continue with the next session because it's already 5:22.
Okay.
Let's give a logical the questions from the participants.
Okay.
Yeah. So you complete whatever you're completing it, and then we'll go to the Q&A.
Okay. What I was saying is you can revise the item price. First I defined as 1st April. So if you think you want to revise the price as on 30th June on 1st July onwards, I'll just change the date. So if you, as soon as you change the date, you can see the rate which I have defined on as on April 1st, it is showing in the historical rate. Okay. And you can again come here and revise the change, or you see the option here, revise price. Here it has given a beautiful option. You can revise the figure by either by decreasing the amount, decreasing it by percentage base, increase the amount by 2 rupee, 1 rupee in that basis, or if you want to increase the value by percentage basis, you can define the percentage as well. If I select increase by amount, you can give a amount over there. Or if you are putting it as by increasing by percentage, you can define the percentage. And if you want to revise the discount price, you can revise the discount price also. So what happens? Automatically, it has computed the new value to it. This was my last price. This is my current revised price. So as on 1st July effective onwards, this would be my current selling price to it. I save it. So this is a price list option given in Tally. You can use this to fix the selling price based on the customer category you wish to follow.
So any questions to anyone so far? Make your last 5 minutes, so you can take them.
Okay, one more topic, small distance. Generally what happens, there are many ledgers or stock item where it is unused, which puts load to Tally. So you can delete that unused masters from Tally. How it can be done is go to chart of accounts. If it is a list of ledgers, you can see this option. I've gone to chart of accounts and go to exception reports. And I click on the show unused masters. So it will give you the list of ledgers which are unused. You can delete these ledgers at one go so that it will optimize your daily performance of the Tally. Where it is unused masters, you can remove it and it will help you in better performance too. Similarly, it has given for, you can go for items as well. So if I click on this, same, you can click on this unused, you can get to see the unused item masters. You can select all, delete it at one go. This will show only in case where there is no transaction and there is no opening balance to the ledgers or item masters. Only those items will appear here. So you can delegate this unused masters from here.
So participants, any doubts to any of the discussions we had so far, be it on eWayBill, eInvoice, or on the tally? Okay. Yeah. So thank you all for Nikia. Can we conclude the tally session?
Yeah.
Yeah. So thank you all for joining, and we'll be sending you a feedback link, and request you to share your feedback, and also let us know what are the topics you are interested to hear from us in the future. And you'll also get a link for sharing the materials, whatever which has been presented. Yeah. Okay. Thank you.